If your cause is not worth dying for, then it's not worth living for. That's today's lesson. That's the question that I want you to ponder on. Is your cause in life worth dying for? Are you willing to go all in? Are you willing to shout out to the rooftops and let people know who you are and why you're here and your purpose in life and where you're going and your cause? Okay? This message is for my kids and their kids. This is going to be my legacy, okay? Which is a cause that I dedicate my whole life, and it's worth dying for, okay? So I want to help out another mom. And by the way, shout out to all the moms that have been taking action these last couple weeks. I've seen a spike in increase in the amount of moms that have been reaching out to me. So I'm just gonna keep doing what I'm doing because I know I'm speaking your language, mom language. Okay, that I'm on that same frequency. All right, I'm there. I'm for it. Let's go. Let's go to work. So here we have on the board, we're going to be talking about the infinite banking concept, okay, using life insurance as an asset to grow cash value tax-free, grow our money tax-free, and utilize that money just like a line of credit to do what? Velocity banking with. But instead of using this to pay off debts, we can be a little more proactive with it in terms of using it to make an investment with, to acquire land, to acquire a sustainable business, whatever it may be, to really hone in and secure your legacy, right? So we have a 50-year-old female here contributing $3,600 a year for 30 years. That's the plan, conservative, okay? Their MEC limit is 12,000. Okay, 12,000 and some change. All right. Simple math. You times that by 30 years. Total amount of money, okay, for 30 years, put in 3,600. Boom, 108,000. Okay, with a MEC limit over 30 years, a total of 360,000. So the max amount of money that can go into this specific policy over a 30-year period is 360,000. All right. Now, her cost, which is the cost of the insurance, right? Life insurance is what we're buying. We're not buying an investment. We're not buying, stocks or bonds, mutual funds, or anything like that. All right. We're acquiring life insurance, so it's going to have this death benefit portion, this increasing death benefit. Her cost per year is $1,305. If you were to times that by 30 years, boom, it'd be $39,150 cost of insurance. So you mean to tell me over 30 years you're only going to pay that, okay? And you're going to put in anywhere from this amount to this amount, okay? And then you're telling me I'm going to have growth anywhere from 4 to 6.5% or higher, all tax-free because we designed this properly. And essentially I'm going to be able to use this cash at any time without any restrictions in terms of, early penalty fees. There's none of that, right? I'm going to be able to use this money while I'm, living, okay? At the same time, I have a death benefit that's going to be growing increasingly every single year, right? And it only costs me that much per year, right? And then if she wanted to continue to fund it well after she's 80, she has the ability to do that. If she does not want to fund it for 30 years, maybe she wants to only fund it for 20, she can do that. If she wants to stop funding it right at 30, she can do that. And guess what? When that occurs, if she decides to never fund it again after a certain amount of time, she'll never pay another premium dollar again. And her money will continue to grow. right? And she'll continue to have this line of credit usage to do properties with, to acquire land, to just keep building, never stop, okay? So on the other hand, she's 50 now, and we're also doing velocity banking with each other right now. We're doing velocity banking together, all right? So we broke down the math. I was like, listen, we're going to be debt free in 2 years or less. Not bad. So we're going to be using a line of credit, okay? At the same time, she'll be getting this in place, all right? So she'll have both going. Some people can do that. Some people cannot. Denzel, who can, who can't? People who have very good cash flow. I'm talking a couple thousand, plus, or at least close to 1,000 plus. And I run a scenario where I start off with 500 cash flow, 700 cash flow, whatever the case may be. Let's just say I do a scenario for you and I only use like 75% of your cash flow, and mathematically it shows that I'll get you debt free in 4 years, in 5 years, in 6 years, 7 years, okay? If that's the case, then that other 25% cash flow we can use to run through the line of credit to fund a policy like this, or fund some sort of other asset. Maybe you want to fund like a self-directed IRA, or you want to acquire some vacant land, cheap land, like 5 grand, 10 grand here, or something like that. You just run it through your debt weapon. Everything we do, we run through our debt weapon, whether it's the HELOC, a line of credit, credit cards, policy, whatever, okay? You never want to use your cash to buy something, okay? Get out of that mindset, all right? We are in 2018, okay? To give you a little history for all my old school savers, for all my cash hoarders, for all my cash only people, all right? There's some conversations with a lot of women that I have to deal with where, I gotta break that mindset. I get it. You're older than me, so you've been around the block. Trust me, I know, okay? Got my mom here, she's been around the block. But guess what? I've been around the block in this day and age, in this technology world, and I've done my research, and I've looked at your history and read it thoroughly. And I've come to a conclusion that after 1971, the game changed when it comes to your money, okay? Mom, do research on this. Look this up for yourself. After 1971, when they removed gold as the standard for your money, that means that the money no longer has any value, okay? It's a fluctuating currency, which means that money is only useful when being used. Get that, very important. Money is only useful when we use the money, okay? If you try to save up the money in an account and do nothing with it, and then try to spend that money later on, all that money died very slowly. It lost value every single year. It continued to lose value due to inflation, cost of goods, taxes, fees, interest, debts, everything. Okay? Loses value over the years. So for those that think that buying cash for a car, buying cash for this and for that is the way to go, if you want to live under the radar, cool, I get it. Not bad, right? But if you want to be practical, and if you want to tackle this mathematically with good credit, no matter what, if you make $1 million a year and your credit is whack, and I make $250,000 a year and my credit score is beautiful, and we both get the same property, and you pay cash with it and I utilize my credit, I promise you, I'm gonna get the better deal than you. You might not even get approved. You might have to go through all these different things just to get that property. Meanwhile, you have the cash to buy the property, right? It's crazy how powerful credit and debt has become ever since 1971. So a little tangent, little rant right there. Let's come back into it. All right. So putting $3,600 a year into this policy for 30 years. Boom. Here's where we're at. Here's our MEC. Denzel, how is the MEC determined? The MEC is determined based off the amount of money putting in, age, health, what else? It's also a preference. Okay. We design the MEC, okay, and the MEC has a direct correlation to the death benefit, all right, which also will determine the cash value performance of this policy. So we want to make sure that we're designing a policy specifically for you, not for everyone, but for you. Okay, very, very specific, where you're like, Denzel, this is how much money I can put in today. This is how much money I would like to put in over the years to come. You know, this is the this and this is the that and this is how much death benefit. All the questions that you could possibly ask. When working with me, we solve that. Okay? Now, I wrote out a little plan for her. And I said, all right, if it takes me 2 years to become debt free, I was like, let's just say for the first 4 years, she puts in that much. All right. And then after 4 years, she doubles it. All right. She starts to put in $7,200 a year. Okay. So that's 4 years. And then I wrote by year 10, she'll be 60. And she'll have cash value conservatively around $65,000. Okay? In a 10-year period or less, starting out with that little money and then kind of, increasing it a little bit after the 4th year. So for like 5 years, 6 years, putting in that, we'll get to this conservatively. And then I was like, okay, for the next 10 years, we'll increase that contribution to 10K. We'll get close to that MEC, okay? Reason why she'll be able to do this is while she's funding this conservatively, she's also going to be building her credit line. She's going to be acquiring rental properties, okay? She's going to be establishing the kingdom and really honing in on her legacy, what she wants to leave behind for family and all that, okay? So after 10 years, increasing her contributions, 10,000 a year, right? Boom, 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 just 10K, right? By age 70, so now we're 20 years out, conservatively she'll have cash value of $240,000, okay? And what she can do with this cash value is whatever she pleases, all right? I just mapped out a little thing that I thought she might really like, okay? Is as you're acquiring your credit lines, okay, business lines of credits and personal lines of credit to acquire more land and real estate and HELOCs and things like that, and you're building, your business on the real estate side, I'd like you to look into this, acquiring a CRT or a charitable remainder trust, right? Which all these assets, all the money, all the cash, when the Lord calls you up and says, all right, your work is done, all right? The Lord calls you, all right? You want to have all your assets go to a specific, perfectly well-designed trust. You don't want it to go to a name like your heirs, kids, or grandkids. No, you want it to go to the trust, the estate first, and then let the estate divvy out everything, right? And you will avoid so many fees and taxes. You'll have this tax-free transfer of wealth, and it's awesome because remember, we're talking charity. charity, tax-free, okay? Now, with that, you can literally write in your will, I mean, you can map out your life's work in this will, in a trust, I mean, down to the T, that would go over what you believe to be your kingdom principles, okay? Your, manifestation of your entire existence here on earth into your what? Your legacy account right here, right? Your kingdom principles will determine your legacy. How you live this life, how you've lived, and how you've continued to live, okay, will determine your legacy based on the principles that you followed during your lifetime. And then if you document this stuff, right, you write it down, you have a book, a manual, you talk about being a business owner, and you're a teacher, and you have traditions, and you just, you pile it on, right? And life's work documented. Imagine that. And then your kids and your heirs and your bloodline, your whole entire bloodline will know who you were and what you did here on earth and what you achieved and accomplished. Do you know how motivating that is? To know someone in your bloodline was like super successful or just lived an amazing life. You motivate your entire bloodline. And when people know where they come from, it provides that much more confidence. For example, if you looked up your last name, right? I want everyone to do this. Okay, this is an exercise. I want everyone to do this. I want you to look up the meaning of your last name and your first name. Okay? So my last name is Rodriguez, and I was looking the root. Okay, for all my Rodriguez people out there, I talked to some people on this. Okay? The meaning, Rodriguez, means son of Rodrigo, which was a king. Okay? That's cool. Number two, Rodriguez, okay, the root word goes back to like Greek and German language, like Roderick, okay, which means famous chief, okay, in the African language, famous chief, famous person. And then I think in another language it means like a man of power, like power. And boy, you can't tell me this stuff, because I'm reading this stuff and I'm talking to my girlfriend. She's like, oh my God, here we go. It's like, that's the last thing I needed, was for him to know this stuff, because now he's going to be up to here and I can't stop him from there. That's it. So if you're that type of person like me, you get big-headed, okay, just bring it back down, become humble, do a little prayer, but just know how awesome that is if your last name is Rodriguez, okay? And you know that you come from kings that invaded Rome and took Rome over. An area, not the whole Rome, but an area. And you are a famous chief. You're of great power, I don't know. So I'd like you to do that, okay, for all my viewers, all my new people, all my loyal subscribers, all my patrons, all my clients. Learn your history, man. This is amazing, okay? And then incorporate kingdom principles, kingdom authority, kingdom leadership, okay? Your mandate, right? And come on, we live the life we want to live, all right? So that's about it. That's all I have for you today. My name is Denzel. Hope you have a wonderful day. God bless you. I love you. See you soon.